Good morning, students. In today's class, we will discuss about bank reconciliation statement. Bank reconciliation statement is a statement which is prepared on a particular day in order to reconcile the differences between the bank column of the cash book and the passbook balance. Guys, you all know that we have three columnar cash book. What are the columns in that? We have discount column, cash column, and bank column. Right. So in this bank column, what do we record? We record all those transactions which are made through checks. So this column of the cash book should match with the passbook balance. But practically speaking, it is not so. There are n number of reasons, okay, for differences between the passbook balance and the cash book balance. Let us try to understand the differences that are there. Why is that there are differences existing between the bank column of the cash book and the passbook balance? I'll just share the screen with all of you. Okay, so these are the reasons, guys. First one, what we have is checks issued but not presented for payment. Okay, check issued. It means what? Wherever we are, say, for example, we have purchased goods, okay, and we want to make the payment through check. In that case, what is that we do? We issue check. Okay, we issue the check, but that fellow has to send it to the bank. He has to present it for the payment. Only then it will be recorded in the passbook. But as soon as the check is issued, we record it in the cash book. We record it in the cash book, isn't it? So check issued but not presented means it is recorded in the cash book but not recorded in passbook. So there exists difference between the bank column of the cash book and the passbook balance. In the same way, sometimes checks are deposited, but they are not yet collected by the bank. They are not recorded. Collected by the bank means they are not recorded in the passbook. So there exist differences. In the same way, there are certain items which are recorded in passbook only, and the trader is going to record them in the cash book only when he gets an intimation from the bank. Okay, so like they are like interest on investments, dividends, okay, which are credited in the passbook, which are recorded in the passbook, but they are not entered in the cash book. In the same way, some payments directly made by the bank, like bank charges, interest on OD, insurance premium paid by the bank, they are not recorded in cash book unless and until the passbook is updated or maybe some intimation is given. The trader is not going to record them in the cash book. Okay, and sometimes our customers may directly deposit the amount in the bank itself. So where it is recorded? It is recorded in the bank, it is recorded in the passbook, but it will be recorded in the cash book only when it is intimated by the customer or maybe by the bank to the trader. Okay, so like that, checks might be deposited, but they by mistake they have not entered them in the cash book. Sometimes, checks are debited in the cash book, but they are omitted to be sent to the bank. There might be some errors either in cash book or passbook. Okay, all these could be the reasons why there exists difference between the bank column of the cash book and the passbook balance. Let us look into how to work on with solving the problems in bank reconciliation statement. For this, you need to first know what is meant by a favorable balance. Okay, guys. So, in order to understand what is favorable balance, okay, these are the things you are supposed to remember. Cash book showing debit balance and passbook showing credit balance is termed to be favorable balance. Okay, why we call it as favorable balance? Say in cash book, what is that we record on the debit side? You record all receipts, and on to the credit side we record all payments. In the same way, in the passbook, if we see, it's just opposite to cash book. We record all withdrawals onto the debit side and all deposits onto the credit side. So if receipts are more, if deposits are more, we call it as what? We call it as favorable balance. If payments are more or withdrawals are more, then we call it as what? We call it as overdraft balance. So is this clear? What is favorable balance and overdraft balance? Okay. Then let us try to work on with a simple problem in bank reconciliation statement. Before that, this is the format. Okay, bank reconciliation statement as on a particular day it is prepared. So you need to write the date. Okay, balance as per cash book, or they might give you balance as per passbook. So this is the starting point. If the starting point is balance as per cash book, what will be the end point? It will be balance as per passbook. Okay, now I'll just try to tell you simple rules with the help of which you can prepare this bank reconciliation statement in an easier way. Okay, guys, just remember that the rule is receipts will increase the balance, whether it is cash book or passbook. If you are identifying that a given item is a receipt, what it will do? It will increase the balance. In the same way, payments will decrease the balance, whether it is cash book or passbook. If it is a payment recorded, it is going to decrease the balance. So let us try to understand what are the examples for these receipts. As we have seen, out of those reasons, checks deposited, paid into bank, or maybe checks collected, or maybe interest on investments or interest on deposits. Okay, you can consider them to be the examples for receipts. I am not saying that only these are the receipts, guys. Similar to this, you have to identify whether a given item is receipts or payment. Okay, receipts will increase the balance. In the same way, when we look to the examples of payments like check issued, interest on overdraft, insurance premium paid by the bank, okay, are considered to be the payments. If these items are there, what will happen to the balance? Balance will decrease. Okay, so remember this rule. What is it? Receipts will increase the balance, payments will decrease the balance. Okay, now look to the problem. Let us just look to the problem. There is some technical issue, I believe. Yeah, look to the problem, guys. From the following, prepare bank reconciliation statement as on 31st March 2016. So, what should be our heading? Bank reconciliation statement as on 31st March 2016. Okay, so before we work out with any problem, you need to put three questions to it, to each of the transaction. What are they? The first one is whether a given item is a receipt or a payment. You should know by going through the transaction, you should be able to identify whether a given item is receipt or a payment. Then the second one is where is it recorded? Is it recorded in cash book or is it recorded in passbook? Okay. Third one, what happens to the balance? Will it increase the balance or whether it will decrease the balance? So, what is the first question? Whether a given item is receipt or a payment, where it is recorded, is it recorded in cash book or passbook? Third one is what will happen to the balance, whether it is going to increase the balance or decrease the balance. Okay, guys. Now, see, bank balance as per cash book is given. So, this is the book available with us. Whatever changes we can make only to this particular book which is given to us. Okay, so write aside passbook. This is not available with us. See, if there is an increase in passbook, what we have to do in cash book? We have to increase the balance. So, what does it mean? If there is an increase in passbook, you need to add in cash book. If there is a decrease in passbook, you need to deduct in cash book. So, this is the simple logic, guys. Okay, if cash book is given, write aside passbook. If there is an increase in passbook, you need to add. If there is a decrease in passbook, you need to deduct. Now let us see. Checks issued but not presented for payment. Check issued means what? Issued means is it a receipt or a payment? It is a payment. Where it is recorded? It is recorded in cash book or passbook, not presented for payment. It means it is not recorded in passbook. So it is a payment recorded where then? It is recorded in cash book. What happens to the balance? Payments will decrease the balance. So payment recorded in cash book will decrease the balance in cash book. What about in passbook? It is not recorded, so it will be more. So what we need to do? We need to add. How much we have to add? 3000 rupees. Okay. Next, checks deposited but not yet collected. Deposited. Is it a receipt or a payment? It is a receipt. Not collected means not recorded in passbook. So where it is recorded then? It is recorded in cash book. So receipt recorded in cash book will increase the balance in cash book. What about in passbook? It will be less. So deduct 2500. Next, bank charges of 100 recorded in passbook only. Bank charges, is it a receipt or a payment? Payment. Where it is recorded? Passbook. What will happen to the balance? Payments will decrease the balance. So we need to deduct 100 rupees. Insurance premium paid by the bank. Insurance premium is receipt or payment? It's a payment. Where is it recorded? In passbook. Payment recorded in passbook will decrease the balance in passbook. So what we have to do? We have to deduct 250 rupees. Okay. Next, payment by our debtor directly into the bank, not recorded in the cash book. Payment by our debtor means what? It's a deposit made by our debtor. Deposit means it's a receipt. Okay, recorded in passbook. Receipt recorded in passbook will increase the balance in passbook. So what we have to do, guys? We need to add 2500 rupees. Next, bank collected directly by the bank. Bills collected directly by the bank. So it's again a receipt recorded in passbook will increase the balance. So what we have to do? We need to add 2200 rupees. Okay, now since that we have all the data available with us, let us put the same data in the format. Okay, so let us go with the data now. Let me write first what we have to write here. So this is for the particulars. Okay, amount column is given. So here, what is the book given to us, guys? We are given with bank balance as per, we are given with bank balance as per cash book. So write the amount in the amount column. Amount column, how much is the amount given? 30,000 rupees. Next, what are the add items we have? The first item is an add item. So let us go with the add items. Check issued, but not presented. Is it an add item or not? Check issued but not presented. As I told you, it's a payment recorded in cash book will decrease the balance in cash book. In passbook, it increases. So we need to add. What other add items are there, guys? Payment by our debtor directly into the bank. So let us go with an add item. Payment by debtor directly into bank account, not recorded in cash book. Okay, so in passbook it will be more, so we need to add. What other add items are there? Bills directly collected by the bank. Third one, bills collected directly by the bank and recorded in passbook only. So it's a receipt recorded in passbook will increase the balance in passbook. So we need to add how much? 2200. So these are the three add items that are there. You add up, how much are you getting? 7700. So what is the total amount? 37,700. Now let us go with less items also. What is the first less item we have? Checks deposited but not collected. Checks deposited but not collected means what? Not recorded in passbook. Checks deposited but not collected. How much is the amount, guys? 2500. Checks deposited but not collected. What is the next less item? Bank charges of rupees 100. Bank charges of rupees 100 recorded in passbook only. It's again a less item. So bank charges of 100 recorded in passbook only. It's a less item. What are the other less items that are there? Insurance premium paid by the bank. Sorry. Insurance premium paid by the bank. I'm trying to paste it here as a less item. Insurance premium paid by the bank recorded in passbook only. 250 rupees. That's it. That's it, guys. Any more? Three less items we have, three add items we have. We are done with it. So find out now what is the total. 250, 2500 plus 100 is 2600. 2850 is the total. 2850. Now deduct that from this particular total. Deduct that amount. How much are you getting? Find out and tell me how much you are getting. 34,000. 34, let me calculate. 34,850. Okay, so this is the difference. 34,850 is the difference. So now see, what is the starting point we have written? Bank balance as per cash book we have written, isn't it? So what will be the closing ending point? Balance as per passbook. So this is our ultimate answer. Okay, balance as per. If cash book is given, end point will be passbook. Okay, so this is how you have to work out with bank reconciliation statement. What's relating to this? As I am telling you, just to go with those three questions, it becomes quite very easy for you. What is it? Whether a given item is receipt or a payment. Second, where is it recorded? Is it recorded in cash book or passbook? Third, what happens to the balance? Okay, whether it will increase the balance or decrease the balance. For any given transaction, if you are able to get an answer for these three questions, very easily you will be able to do bank reconciliation statement. Thank you, guys. Thank you very much.